Hi, we're going to try a problem where we have to create an income statement, statement of retained earnings, and balance sheet. This is problem M1-16, and it can be found in your textbook on pages 30 and 31. It's also the third problem in your Chapter 1 practice problems in Connect. Okay, so below here they have created templates for us for the income statement, statement of retained earnings, and balance sheet. And if you recall from your readings, and you should have done your readings at this point, that the income statement always has to be prepared first, because the net income from the income statement needs to go on the statement of retained earnings, and the ending retained earnings balance has to go on to the balance sheet. So let's begin. Our problem says that the information following was reported in the December 31st, 2012 financial statements of Southwest Airlines, listed alphabetically, amounts in millions. Okay, so our first assignment here is to prepare an income statement for the year ended December 31st, 2012 and enter your answers in millions. In other words, use the numbers just as they are represented above here. Okay, so every financial statement has to have as a heading the name of the company, the name of the statement, and then in this case it's an income statement, so we have to indicate the time period covered. This is important because if you just put December 31st, folks reading it won't know whether it's for the day December 31st, for the month ended, or for the year ended. So make sure your heading is correct. The formula for the income statement is revenues minus expenses. So we'll put that here. Revenues minus expenses. We don't know if it's an income or a loss yet, do we? If the revenues are larger than the expenses, it's a net income. If the expenses are larger, it's a net loss. So let's go through our list here and pick out every revenue account, anything that says revenue. And the only thing that I see that is revenue is ticket revenues. In Connect, there's an autocomplete, so as you begin typing, it completes the word for you, but we do have to enter the 17,100. There we go. Okay, now expenses. Expenses are usually listed from greatest to least. So let's see if we can find the expenses and see which the biggest one is. Aircraft fuel expense, $8,700. Income tax expense, $260. Interest expense, $130. Those are both smaller. Landing fees, $3,100. Repairs and maintenance, $6,950. And then finally, salaries and wages, $3,240. So let's try to list them greatest to least. Connect won't mark you wrong if you don't, but it's good to get into those good practices. So the first or largest expense was aircraft fuel expense. It's $8,700. Commas are not necessary. The next largest is salaries and wages expense, and $3,280 was that amount. The next largest was landing fees, I believe. Let's double check. Landing fees, $3,100. Let's see, I believe repairs and maintenance, but let's check. Repairs and maintenance, that looks like the next largest. And that is $1,200. Oh, let's enter that correctly. Now we're down to income tax expense and interest expense. We're going to list interest expense first, and the reason is that you'll find out later on, we're doing a little bit more complicated versions of the financial statements, that we always save income tax for last. So let's put interest in there at $130 and income tax at $260. We have a Connect function, an Excel function here which totals them for us. All we have to do is type in total expenses here. We need to type in total revenues here, and then our formula. Well, let's see. The revenues are bigger than the expenses, so we have a net income. If expenses were bigger, then it would be a net loss. So now we have to subtract Revenues of $17,100 minus expenses of $16,670 give us a net income of $430. Our next financial statement, the statement of retained earnings, we have to complete our heading here too. Name of the company, name of the statement, and the time period covered for the year ended. In fact, it tells us here, prepare a statement for the year ended. And it wants us to assume that the beginning balance in retained earnings was $5,370. Okay, so the statement of retained earnings tells you about the company's earnings. How much did you have in the past that you've kept in the company? How much do you have in net income from previous years? Less how much you gave away gives you the amount of earnings or net income that you kept in the company. So what we're going to do is add this year's earnings or net income and subtract out any dividends, which are earnings that you gave away to the stockholders. So we know our net income from the statement, the income statement is $430. And let's see if we have any dividends listed above. There we go, 20. Those need to be subtracted. Those are earnings that were not kept within the company. So we're going to do a minus 20 there, and it totals us nicely. It totals it out for us nicely, $5,780. So beginning retained earnings represents all previous years' net income or earnings, less dividends for those years. We add in this year's earnings, which we call net income. We subtract out this year's earnings, which we did not keep, which we gave away to our investors. Those are called dividends. And when we total, it's $5,780. This amount is going to be needed for our balance sheet, which is the next financial statement. So we've got the name of the company, name of the statement. Now this is a little different. Notice how it says to prepare a balance sheet at December 31st. The balance sheet is prepared for a particular day and time. The assets, liabilities, and equity change from day to day. So let's put our formula in there. It's the accounting equation. Assets have to equal liabilities plus stockholders' equity. There we go. Okay, so we're going to identify all the economic resources that will provide a future benefit to the company. All the assets, in other words. Oops, sorry about that. Let's scroll up. Okay, accounts payable. Now that's a liability. It says payable. Accounts receivable. That's an asset. It's an expense. That doesn't belong to cash. That's an asset. Common stock is an equity. Dividends, an equity type account. There's another asset, equipment. These are expenses. Here's a payable, which is a liability, another expense. There's our retained earnings, another expense. Our final asset is supplies. Now we're going to list them in what's called liquidity order, which means nearness to cash. How quickly will things be converted into cash? Well, cash is already cash, so that's going to be always our first account. That was 2009-70. The next thing that will be converted to cash is any receivables, accounts receivables or notes receivables, because they'll be converted to cash when our customers pay us. Now, supplies will never be converted into cash, I suppose, unless we sell them, but they will get used up before long-term assets like equipment. So we'll put supplies next, and then finally we put assets that get used up very slowly. These are called long-lived assets because they take a long time to get used up. So our total assets total $18,600. These types of assets like land, buildings, equipment, those are sometimes called fixed assets or plant assets, as well as long-lived assets. Okay, liabilities are the debts of the company, so we're looking for the word payable because it's amounts that are owed. So we said accounts payable was 1. Let's see, any other payables? There we go, notes payable. The difference between accounts payable and notes payable is that accounts payable is usually for things, services or goods that are bought on credit, where notes payable are often used for borrowings, like when you borrow money. A notes payable really it refers to a promissory note, a written promise to pay a certain amount of principal plus interest at a future date. And those are usually used for borrowings, either short term, 1 year or less, or long term, more than 1 year. borrowings. My first student loan was a note that I had to sign, promising to pay back principal plus interest. Okay, so let's total up those liabilities. They come to $11,600. That's the total amount of debt our company owes. Now, stockholders' equity. There's two types of accounts there. The original investment of the stockholders, called common stock, and the earnings of the company to date, retained earnings. Okay, now common stock, we're going to look at that above here. Common stock total $1,220, and retained earnings we can get from our statement of retained earnings. Now, they do give it to you in the list above there, retained earnings as of December 31st, but most problems will not. Most problems you're going to have to go to the statement of retained earnings, $5,780, and get it there. So our total equity, the total amount of the company that the stockholders own, is $7,000. Oh, we have to scroll down a bit to get to stockholders' equity. Okay, now remember the formula. The assets have to equal the liabilities plus the stockholders' equity. $11,006 plus $7,000, that does equal $18,006. Our last label here will be total liabilities and stockholders' equity. Okay, so remember the relationship of the financial statements. We first do the income statement. We figure out if there is a net income or net loss. If the revenues are bigger, it's a net income. If it's a net loss, the expenses are bigger, and we carry that net income into the statement of retained earnings. Previous earnings that are kept within the company plus current earnings minus current earnings that are given away gives us the ending retained earnings, and the ending retained earnings balance goes on the balance sheet as part of stockholders' equity, and the assets have to equal the liabilities plus stockholders' equity, which is the accounting equation. Remember that we've got our ebook here in case we need to reference that. We can click on Check My Work as well to determine whether we did this correctly, and please remember that it will only tell you if what you've entered is correct. If you've missed anything, it will not give you that information. You'll have to make sure that you've entered in all the titles, total assets, total liabilities, total stockholders' equity, and such, and also the line that indicates the time frame, because it will not, Check My Work will not tell you that. You can use Check My Work 3 times within each problem. Now, you're going to have a homework problem where it will provide you with the previous year's account balances, and you're going to be adding those in.